Okay. Yo, what's up, Jordan? Okay. Let's get started. So, trading psychology. Trading psychology is one of the most important parts of trading, in my opinion. Cringe ass BTC, but well, I think it's gonna be fine. Maximum we get is 102k. I don't think we get further than that. Um, but anyway, trading psychology is very important for a few reasons. One, trading for a lot of people is very hard. And at least in my opinion, technical analysis is not the main reason for that. Because when you look at technical analysis, it is absolutely something you have to learn. You have to put time into it. But when you put the time into it, when you look purely at a technical basis, you can learn, for example, support and resistance pretty fast. You can see, hey, we bounced off of this line a few times, so if we touch it again, we're probably gonna bounce off of it again. And chart patterns, they also make sense when you look at them. Like a head and shoulders pattern looks like a head and shoulders. It is like, looks like this, and the only thing you have to remember is that that means it's going to do this. Um, it is not that complicated. You have to put time into it, and for different trading styles, especially for example, order flow or for very heavy open interest layer stuff, for I'm gonna mention ICT, but whatever for ICT, for harmonics, etc. You need to put extra time into it. But in general, you can make it pretty simple if you want to. So why do people still struggle with trading? Why are there so many people that are not profitable? Uh, that, in my opinion, comes down to trading psychology. So, trading psychology, in this case, mostly what I'm going to talk about is what you feel when you go into a trade and what the reasoning is behind the bad decisions that you're making on impulse. Because there are two parts to this. One, if you don't have a plan, you're gonna lose. No plan, you're gonna lose, no matter what. Um, so having a very good plan is very important for having proper psychology. The reason why I say that is some of you might be extremely new to trading, some of you might be a bit more experienced, right? Um, but at least in my experience, when you just start trading, you kind of just mess around. You don't really know what you're doing, and you oversize heavily. Like when I started, I didn't know how margin worked. I didn't know how leverage worked. So I would take my portfolio and then make sure my margin was 1% of my portfolio. So let's say I have 10k, then my margin is going to be 1k. But I was trading on 200x. So that was way oversized and that didn't work. And a lot of people do similar things where they just heavily oversize because they don't know what they're doing. And then you are in trades and you just see your portfolio making like incredibly heavy swings. You see these people like 10xing their portfolio in a week. That is not normal. When someone is doing that, they are heavily oversizing because that is not something you can consistently do unless you're just E, I guess. Someone like that can do it. But a normal person can't do that. So you need to have a plan, and the reason for that is when you are heavily overpositioned. Um, let's say you have that 10k portfolio. Well, if you are opening a trade and you come back after 4 hours and you are now down 8k, well, you are stressing out because that is 80% of your portfolio, right? That might be an extreme example, but that is something that happens. Or you have way too many positions open and you just see plus 10k, minus 5k, etc. Way oversized brings way too many emotions, and that is going to lead to impulse decision. So the reason why if you don't have a proper plan, why you lose is because of impulse. So if I put a little arrow here, the reason for that is impulsive decisions. So how do you prevent that? And this is the part I mentioned at the start. I'm gonna gloss over a bit, go over real quick, because this is an entire stream. You need to have a proper trading plan, like a very solid trading plan. And at the start, that is just going to be make a trading plan, know how much you're going to risk. Make sure you have 90% of your portfolio into spot. Make sure you have maximum 10% into futures. Make sure you know exactly what you're risking. So I, for example, at the start of every period, nowadays I use months, or if a month is going very well, I will do it somewhere within the month on an important milestone. But every month, at the start of the month, I calculate my 1R, and that is going to be 5% of my leverage portfolio. So I know I will always lose 5% of my leverage portfolio if I lose a trade. And that brings ease of mind on its own. But in general, just risking something that you're comfortable with is going to make it a lot more easier to properly trade as well. This, what I just said, is an entire video. Wait, let me actually link it in chat. It's an entire video. It is 2 hours, so I'm not going to do that during this stream because we don't have that kind of time. I'm not here to stream for 5 hours straight. So let's not do that. But I've done it in the past, so I can just link that one. It's really easy. And I will put it in the stage chat. It is this video. I'll actually put timestamps of it. Spot is from 0 to 1 hour. Lev is from 1 hour to the end. So I'm going to skip over this now, and we're going to go to the more psychology-heavy parts of it. Hey, what's up, Caleb? Bro, Jordan, if you're going to keep saying that you're full-porting stuff, people are going to start believing you. Says like every other stream. No, not even every other stream. Like literally like 3 or 4 times a stream. That is part 1. That is related to the video. Just put in chat. For a trading plan, I recommend watching that video. Now, as for the actual trading psychology concepts, there are, in my opinion, a few reasons people consistently lose money. One is recency bias. This is a very big thing people struggle with at the start until you can properly identify it and until you know exactly what's going on, right? Because at the start, the candles are just going to bring a lot of emotions in general. What I mean by this is, let's zoom in, right? And this is going to be regardless of my market bias, right? If I look at this, and let's say we are right over here, obviously a bit cherry picked, right? Let's say I thought Bitcoin was going to go down. So throughout this entire period, I did not buy any Bitcoin because I thought it was going to go down. Now, what happened in the end is I was wrong. It didn't go down. It's going up instead. A thing a lot of people struggle with is when they see this happen, they will get heavy recency bias and be like, okay, we get 2 green candles now, we are going up. And for that reason, people buy. That is a very bad thing to do. And if you've done it a few times in the past, you know that this almost never ends well. If you buy because you just see this happening, it is going to go wrong. And the other way around as well, right? When we look at any of the crashes, what will happen quite often is most people will sell in the last few candles. Because they will look at these candles and be like, wait, it's going down, I don't want that, and they sell. It is that simple. That is an emotional thing that a lot of people do, a thing a lot of people struggle with, and a thing I struggled as well with in the past. Sound cut off? Oh, that sucks. Wait, let me rejoin. Well, let's see. Is it better? You had audio, and others didn't. Do you still have it? Like, can anyone in chat hear me or not? Still nothing. Wait, let me check my settings. Well, can you hear me now? I switched the input. Should work. I guess this. Okay, I don't think you can hear me yet.
Discord just rugged us. You guys hear me?
I think it did. Can you hear me now?
Your audio is fine now, bro.
Alright, that's nice. Okay. That sounds so different. Yeah, I can imagine. I have a British accent all of a sudden. Unbelievable.
Imagine.
Okay, let's see. Is the screenshot working fine as well?
Yeah, all good, bro.
Okay. Where do we leave off? Did you guys hear the thing about like green candles that people buy? Or was that not audible? Yeah, okay. I can keep going. Stop that square in the middle. Okay, yeah. Cut off at the red candles. Okay, thank you. Okay, so what I was saying is people look at a chart and look at what is currently happening and use it as a way of seeing, or use it and think that is also going to happen in the future. So when you see red candles like this, you're going to sell because, hey, it is going down. I need to sell. That is a bad thing. So a lot of people do that. I struggled with that as well in the past. That is something that market psychology just brings on you. There's a reason why a lot of people struggle with holding things for long term. Even if you go towards assets that perform really well over a long amount of times. Um, for example, the SPX, right? You can realistically say that the SPX will almost always go up over time. That doesn't mean it is always going to go up. Not every candle is green. A lot of people still don't make profit because they sell in moments like these. Because it is going down means it's going to go down in the future as well. That is our standard reaction. Now, part one of fixing that reaction, because that is very normal, is to realize what's going on, and to make sure you are as informed as possible about not only psychology, right, but also just technical analysis. So, for example, if I look at this, I can say, okay, I was wrong on this. I don't think it is going up now, even though I thought it was going to go down, so I missed my entry. You need to accept that. First part is just accepting that that is happening. If you miss your entry, you miss your entry. It is that simple. We have thousands of tickers, like an infinite amount of tickers, right? We have an infinite amount of time frames. You can even trade on the 1 minute time frames if you want to. You can do that. You can trade on the weekly time frames. Infinite amount of time frames, infinite amount of tickers. There is always going to be a next position. So even if you miss your entry, there is always going to be a next one. And even in the worst case scenario where somehow crypto entirely ceases to exist, well, there's still going to be Forex. Like absolute worst case scenario, we all become Forex traders, which I wouldn't like, right? But the markets will stay because Forex is never going to go away. Because coins are always going to be there. Things like gold, oil, indices, everything. It's all going to be there. Even if crypto disappears for some reason. So it is very important in moments like these to realize. I just started. Yeah, it's going to go away tomorrow. We're going to crash. No, it is very important to realize that even if you miss one trade, like there are so many more. Opportunity cost really doesn't exist. So it is important to just let it go. If you miss your entry, you miss your entry. That's what it is. Second one is be informed. So I'm someone who uses fibs, right? So if I just draw a fib from the high to the low, in this case, I can see, hey, if I want to buy now because the candles are going up, right? That was clearly wrong. If I buy now, well, my resistance is right here. And where's my next support level? Well, right here. So do I really want to take this position? Like if you take some time, take some analysis, and you think for yourself when you want to enter, hey, this is actually a place I want to enter. And you just put this on a chart and you look at this and you're like, do I actually want to enter this? Like, is this actually a smart choice? No, absolutely not. This is not something you can enter at all. Yeah, the forbidden 0.01 R trade. Exactly, like this is not something you want to enter because it's right at resistance. So you can use that and say, okay, well, clearly I was wrong. I will simply adapt. And a lot of people stay stuck in that mindset of, okay, I missed this trade, I missed this trade, I missed this trade, etc. It takes a while, but it is very important to realize that there always being a next opportunity not only means that, hey, if you miss it, doesn't matter, there's going to be a next one. It also very obviously means there's going to be a next one. So look for the next one. So in this case, look for just a next support level, right? This used to be resistance. Well, maybe we use it as support now, so maybe I can look for a trade there. Or in a different case, if you have what's it called, say, okay, I think it's gonna go up, but maybe it doesn't. But this is not a place where I can buy. So what if I just place buy orders lower? Or what if I short very important levels? Something like that. Look forward in that case. That is the next step after like kind of accepting, okay, I've missed a trade. Don't get stuck in that mindset, right? I've missed a trade, and now you have to like look for a next one. And if you really struggle with that, that is also just a sign, okay, maybe you need to take a break. Because if you cannot get over a loss, well, that means your mental isn't there, and you're clearly not ready to trade at that moment. So just take a day off, and then come back the next day. That is also completely fine. Recency bias in general. So wanting to buy because of these candles, it's something you really want to avoid. Because almost always it's going to be a very bad choice to buy or sell just based off of single candles, right? Two green candles don't mean it's going to go up. And several red candles don't mean it's going to go down. Because when we look at important crashes, for example, let me put it on like 6 hour. When we look at important crashes, for example, well, if you sell somewhere in this candle, right, because you think, okay, it's going down really fast, I don't want to be in that. Almost always, after capitulation events like these, it goes up. Why? Because people that sell on impulse have sold, they're out of the market, and actual investors are entering because they get the same asset at a discount. If you've been a part of crashes like these, you've probably also noticed that. I remember, and this was back when I wasn't that experienced trading, right? I remember when altcoins crashed in, I think it was this dump. Something like this. I also felt like just completely capitulating and just completely selling everything because altcoins were dropping really fast. If I go to total 3, yeah, it is this dump. Because altcoins in like the time span of a day and a half went down 23% across the board, which means that different coins are going to go down a lot more. So that is this dump you see, for those that weren't there. So that means that this asset just went down 44% to the wick in a day. Things like those happen, and things like these, it is very important to know your risk management and to know what your trading plan is. So in this case, for example, I have a very clear difference between the way I handle my spot portfolio and my leverage portfolio. For leverage, I have hard stops, and I keep to that. If I have a long open at this moment, this will get stopped out. Okay, I tanked one stop loss, set at the start, right, as -1R, -5% of my leverage portfolio. It is what it is. You can tank one loss. However, for spot, almost everyone uses soft stops. Or if you do that on leverage as well, using soft stops, things like these are very stressful. So in that case, for by the way, soft stops for leverage, I personally don't recommend it. But if you do use it, I'd recommend you having a hard stop just lower. So if something like this happens, you at least get stopped out, right? Or if you trade on isolated, that's done automatically, right, for your liquidation price, whatever. If you trade on cross and you do soft stops, well, first of all, you're living on the edge. Second of all, make sure you have an actual soft stop, a hard stop as well, in case something like this happens. But for spot, I have made a rule for myself. I am not allowed to sell my spot positions in a capitulation event. Shut up, Jordan. So when something like this happens,
Imagine.
no, it's fine, it's fine. When something like this happens, I will not sell, no matter what. And the reason for that is because things like these happen so many times, where if something like this happens, your emotions just take over, like completely. Because you are looking at this and you're like, my asset's going down a lot. If you see it early, well, sell, obviously. If you see war news on Twitter and you see, hey, the markets are starting to dump, well, obviously sell. But if you are in the middle of a capitulation event, like if you see it, let's say you're down here, right? Don't sell. Unless it's like a full-blown crash like Luna. But don't sell just because the candles are going down. It's gonna be on, yeah, there. I'll upload it later. You shouldn't sell just because candles are going down, right? Because when something like this happens, we can return to technical analysis. And I'm going to keep the TA very simple for this video, right? I'm literally just going to use support resistance. When we are in this moment right here, or actually I can just use the replay feature. That's a lot easier. So let's say, all right, I should do it on the daily, a bit easier. Let's say we see the capitulation event right here, and we notice it right here. Now we are already like way beyond saving, right? This asset is going down a lot. Now, what do? Something I always do when this happens, because I don't allow myself to sell based on emotions, right? It has to be technical analysis backed. I zoom out like this, go on a higher time frame, I zoom out, and I use simple analysis. That is a previous resistance that should now be support. This is also support. In reality, until we get a bearish retest of this, I should not sell, because we can just treat this like a range. Here's your first SR level, here's your second one. It makes sense to sell over here. It makes sense to buy over here. It doesn't make sense to do things in the middle. And simple analysis like this is something that will help you a long way in psychology, for the reason that it is easy to see. I can look at this chart no matter what, and I will instantly see what's going on. There are 3 lines on there. There is one resistance, one support, and another support a bit lower. Now, that makes it very easy to look at, okay, when should I actually sell? Like, I want to sell because it's going down really fast, but when should I actually sell? I should sell when we retest this, or when we close candles below this. And that is hard to swallow, right? Because if you entered here, well, you're down like 20% already. The next top is still down, bottom is still down a lot. But the reason why that is important is because you usually make analysis based on very simple theses. You can buy here because you are at support, and you will likely get a retest of that support. It is a trick to keep you like mentally sane, like trying to keep it as analytical as possible, for the same reason that, for example, when children are like very mad, right, they have to like count. I don't know if that is actually a thing in other countries. They do that in the Netherlands a lot.
Yeah.
Where if someone is very mad, you make them count, and then they will become less emotional because like the rational part of their brain is taken over. You can do that in trading as well. if you try to get back, zoom out, and just go back to proper reasoning, you will make more informed decisions. I'm not going to read that out loud. And that is the key eventually. You don't want to sell because of emotions. You want to sell because of rational decisions. Now, if you see a candle close right here, that makes sense to sell. What do you want to say, Caleb?
Oh, I was just agreeing entirely with you, bro. Like, just to chime in, I think a lot of people struggle with psychology when it comes to trading and managing money because a lot of people, like, it's a simple premise of what you don't know, right? So, a lot of people know how to make money, but not a lot of people know how to do two things. They don't know how to save money, nor do they know how to actually multiply the money in which they're making. So, when it comes into trading, a lot of people jump into it trying to get rich quick. They don't really focus on mastering the skill. And it depends what path you walk down, right? If you're walking down the path of actually learning and, collecting the correct insights so that you build a solid trading plan, or if you're just, gambling, you're blindsided, you can't see clear direction and clear thesis. Like, to give an analogy for it, it's like if you were to understand a story of a painting, you're not just going to look at one corner of the painting, right? You're going to zoom out and you're going to look at the whole picture. So, yeah, it's really a case of just experience within the game, patience, and yeah, knowing the correct tools and insights and confluences. I think really putting that together and making your own trading plan is really key, and this will bring confidence to you in the markets, right?
Yeah, exactly. That goes back to the trading plan idea. Like, there's a difference in how you trade. As I said at the start, if I trade leverage, I would just take the loss, and it is one loss. That is exactly what we calculate our systems on. I will know I'm profitable in the long term, even if an individual trade is going to go bad. Um, so that is one of the reasons why it's very important to have a trading plan like that that you can be confident in.
100%. And also the consistency as well. Like some people ask, hey, what's your biggest win day trading? It's more so if you're always risking 1 hour, targeting 2 to 3 hour, and using the same margin, then your wins, your losses are going to be very similar, right?
Yeah, that's exactly it. It is that is actually the next part I wanted to go into, but I'll answer the question in chat first before that. But that is it as well. I value consistency over everything else for the reason that markets really favor that. You can get one big win, but if you don't know what to do with it, you're gonna lose it on the next play anyway. Um, so that's a part of that as well. Okay, let me get to the question. Yeah, when I'm in the zone, I'll find myself quickly accepting a losing trade and waiting for the next setup. But when I'm not in the zone, it's usually the cause of my biggest losses. Yeah, that is something a lot of people struggle with. Um, I am someone who didn't struggle with not accepting losses. I am someone who would take losses too early. I would close a play too early, even though it wasn't invalid. I had the opposite problem, but I do know how to resolve it. Um, so there are two main reasons why people usually have this problem. Reason number one is they don't have a plan. Let me actually not do that by hand. Uh, so reason number one is not having a plan. And the reason I bring that up again is for this. As I said at the start, the way I trade leverage, I enter a trade, I know exactly what I'm going to lose, I know exactly what is at risk. My trade is based on reasoning, it is based on analysis, and I know that in the long term, that is going to be profitable. I know that even if one trade is not going to be profitable, it is okay in the long term. And because I know exactly what I'm risking, I don't mind losing. Because quite frankly, when I look at my stats, when I look at my trade log, etc., I don't really look at the losses unless I go below a 70% win rate. Because I know my system has between the 70 and 80% win rate. If I go consistently below that, I will adapt my system. If I lose one trade, well, that is just a part of it. If I make 100 trades, I know I'm gonna lose about like 20 to 30 of them. And having a system like that you can rely on is a big part of that. That is also one of the reasons why I always use hard stops. I don't use soft stops for that reason. I want to know exactly what I'm risking. So if I want to risk 5%, I am risking 5%. I am not giving it up to chance to by accident lose 10% because my stop loss slipped or whatever. So as for accepting losses, one of the main reasons that usually comes from is from not having a plan. If you don't know what you're risking, how that will plan out in the long term, it is very easy for yourself to make excuses like, hey, it's going to go up after, just need the DCA and then it's going to be fine because the markets go up anyway, like those kind of things. When in reality, when you do those things, you are making your trading plan wildly inconsistent. When you let go of a stop loss, you can now all of a sudden lose double the amount you wanted or triple the amount you wanted. Or when you DTA, that can go up even more. So that's going to make it wildly inconsistent, and that is going to make sure you are not profitable in the long term. So the reason I value consistency so high is this. If any of you have never seen this before, but let me actually change my screen share so I can put it into a calculator, because I am not doing that out of the top of my head. Change windows. Okay, that should fix it. Let's look at this. The reason why I value consistency over everything else is a very simple equation. And if there's anyone in chat that sees me making mistakes, just point it out. I'm doing this out of the top of my head.
Yeah, Steve, sorry, I don't know what you changed, bro, but there's a big echo now.
There's a big echo now.
Yeah, there's the webcam mic.
Wait, that is so funny. Wait. Share audio off. Did I fix it?
That fixed it, yeah.
Wait, why did I... Okay, so my screen share was picking up my own mic and broadcasting that as well. That is so stupid. Okay. Okay. So what a lot of people will do is when they don't have a plan, they don't know how much they're going to gain. That is the first part we're going to resolve with this. And the second part is when people come to me and say, hey, I have a small portfolio. How can I change that? Or how can I... Do you have tips for a small portfolio? I'm like, it doesn't matter how big your port is unless it's like at the size where you have to really worry about order size because you might have too much slippage, like those kind of things. So small port really doesn't matter. Why do I say that? Let's say you have a $100 portfolio and you trade, you make 1% a day. So we do it times 1%. How many days do you trade? You trade, well, let's say you trade 1 quarter, right? You trade 3 months, so like 90 days. 1% a day makes $244. Now, $100 is something you can easily achieve in real life in most regions, right? I know there's some stuff with other regions making less, but in that case, the value of a dollar is more anyway. Relatively, should be about the same. When you grow a port, consistency like this is key, for the reason that if you stay consistent, you will exponentially grow your account. In the first 3 months, you will get to this, right? Now, if you do, so we went from 100 to $244. This plus 144. That's in the first 3 months. Now, if you do that again, 3 months again, you're now already at 600. You're now at a 6x. Do it again. What did I do? Oh, like that. Making, what's it called? Making 1% a day is in the long term gonna increase your portfolio really fast. That doesn't mean that it's gonna look fast at the start, because 1% on 1% on 1% is going to keep growing exponentially. But that means it looks slow at the start. The key to this is consistency, because we have done this 3 times now, right? Yeah, we've done this 3 times. So we are now at 9 months. Let's say you do it for a year. You have now, in 1 year, turned $100 into 3.6k. You can calculate that onto whatever port size you're using. Let's say you use 1k. This is 36k. That's from 1k to 36 in a year. That is incredibly fast if you do it consistently. Because this doesn't stop, right? Once you're able to do this, this will keep going. This is not something that stops if you know how to do it. Consistency is truly key. Because when you take 1% a day, 1% a day, 1% a day, that minus 5%, if you mess up your trade plan or if you let go of a stop loss and all of a sudden you're losing a lot more, is going to hurt you so much more. Because imagine this equation, but at the start, you lost half of your portfolio because you didn't set a stop loss. Now we will do the same thing with $50 because you made one mistake like that, right? You now start with half of that. I'm not gonna do it 90, I'm just gonna do 360. Oh. What on it? Oh, I hate these calculators. It's my own mistake, but hey, I'm gonna blame the device anyway. What's it called? You know what? Half of that. That one like mistake you made, that one stop loss you let go, that just made you have a bigger loss than usual. After here, you're gonna have half of what you would have had. So why not stay consistent, even if you take a loss? Like, even literally, if you take one loss, like, if I were in the long here, because honestly, when I look at this long right here, this is a pretty good long, even though it's stop loss. This is a good long because your long support at a reasonable level had a pretty good stop loss, you had good risk reward, etc. This, in my opinion, is a good long. If you take the stop loss like it is, that is good long. But if you let go of the stop loss, remove it, and because you see it go down to your stop loss, and now all of a sudden it stops you out over here, and now you lose. Let's say there's a way you can do this. You do it like this, equal size. So let's say it stops you out over here instead, because you let go of the stop loss. You now lost 5 times as much. So you now have a significant end in your portfolio that we showed off over here. You're now going to end up with so much less. Consistency is really key when doing this. Accepting a loss is part of that consistency. If you have a plan, if you have a stop loss in mind, you need to stick to that. For the reason that even if the individual play might work out better because you deviated, in the long term, it is going to completely mess you up. In the long term, you're going to end up with way less than what you would have had. And that is why consistency and accepting losses is so key. Now, how do you accept losses? First of all, that is really hard at the start. Second of all is you can put a few things in place to hold yourself accountable. One of the things I do to keep myself accountable is, and I think a lot of traders do this, if I have a risk limit. So this starts with my trading plan, right? For example, I will not have more than 3 trades open at once that are at risk. Stop loss at entry doesn't count, stop loss at profit doesn't count. At risk, I will never have more than 3 open. But on top of that, I have one for spot as well. And for the amount of trades as well. I'm going to keep it to leverage because leverage is the easiest in my head because it's just one stop loss, right? So apart from my regular trading plan, is if I am emotional, I will not trade. If I am tired, I will not trade. Those are obvious things, but pretty hard to actually do. However, something more systematically you can do, because those things they're not subjective, right? You are tired or you're not, but it's like harder to judge. Something more objective is if I take 3 losses in a row, I will stop trading for the rest of the week. And I am simply not allowed to trade anymore when I do that. Now, obviously, that is a self-imposed rule. There is a world where I break that rule. But why would I do that if this is my long-term plan? That is where the advice stops and where the action begins. That is where you need to keep it to yourself. Put rules in place like this. So 3 losses is stop trading for the week. Put rules in place like this when you are not emotional at all, very structured, just making a plan. And practice them, like really practice them. That is where the discipline comes in. Now, a few things you can do to discipline yourself is like, for example, like set up a punishment or something. Like, I don't know, take a cold shower if you actually do it. I don't know. Set up a punishment that you think is actionable, or you have to take a break, or you have to read a book, or whatever. You have to have these systems in place to make sure you don't deviate from that consistency. Tell your mom to get your ass. uh, you have to have systems like these in place to make sure you don't deviate from that consistency. Because in the long term, I know I will be consistent, but if I deviate from the plan, it is going to hurt me. So I don't want to do that, so I have rules in place like these. So that's also why 2 losses a day. And I have like a risk limit on the account, right? If I lose for X amount of time. I don't have a hard limit for this one, like hard amount of time. It hasn't happened yet. But in general, what I mean with this is, because I think this one's pretty obvious. If I lose 30% of my leverage account, I will stop trading until I have adapted my system. Until I have actually like changed the way I trade, because that means something is wrong. So this is for emotional purposes. This one is to make sure my system still works. Because hey, this could be an emotional thing, but what if my system actually doesn't work? There's a hard stop for that. If that happens, my system doesn't work, I need to change something. Yeah, it will be on YouTube. I'll upload it later. What leverage do you use usually? I do not use systems where leverage matters. What I use is a risk-reward system. I will go into this very briefly. So if I have a position like this, at the start of the month, I will calculate my 1R. My 1R is 5% of my leverage portfolio. 1R is 5%. I will use this 1R for margin doesn't matter either. I will use this 1R for the rest of the month until I recalculate my 1R. And what that 1R means is okay, sorry. It's because it's you, Jordan. What this 1R is the amount I lose when stop loss were to hit. So if I have a 1K port, I will make sure I will always lose minus 50 bucks. And you do that by adjusting your position size per trade. Yeah, that is how I do it, right? You use different numbers. This is adapted to my system. I don't recommend going above this though. If you want to test it, use 1% first to test it out. But in general, I will make sure I always lose 50 bucks on one trade if I have a 1K port, right? And the reason for that is because I like consistency. Because 1R, I can use this to calculate things. I can say, okay, I am up 3R. That means I have made 3 losses back. And $100 profit, yeah. Let's say I make 2R with this trade. Hey, I have made 2R, so I can tank 2 stop losses hypothetically and be break even. The reason why I use this system is because it's very consistent, and you cannot achieve the consistency with any other system. because no matter how far away my stop loss is, I will adjust my position size, and that is key. It is position size that matters. I will adjust my position size to make sure this stop loss is actually minus $50. So on a 1% stop loss, so like that, we're very zoomed in, so this looks really weird. On a 1% stop loss, on a 1% stop loss, that means I would have a position size of 5k. Because if 5k goes down 1%, I would lose $50. But let's say I have a long like this, that it has a stop loss of 10%. Something like that. I still want to lose $50 if that trade were to hit stop loss. Like, I still want to have that consistency. So what I do is I enter with a lower position size to keep the same risk to reward. It is always 1R. This stop loss, even though it is 10 times bigger than the one on the left, I will still lose minus 1R. So minus $50. How do you do that? You lower your position size. So in this case, I would risk $500 instead of 5,000. And you can see what it ends up in, right? So this trade has way higher risk to reward because the stop loss is so close. Every 1% I'm going to make a 1R. This one needs to climb 10% for 1R. That is how it works. That is also why in my trades I put my R value in there, like this has moved for 3R. This makes it very, this is also a psychological thing, that's why I wanted to explain it real quick. This also helps you detach from monetary value a bit, for those who struggle with it. Because this dollar amount changes into 1R. And you can simply calculate everything in R. So if I lose 3R, I'm done for the week, because I shouldn't. Or 3R in a row. Yeah, I have a full video on that. That is a video I linked a bit higher up. It starts 1 hour in where I explain this in like great detail. This one. Leverage trade doesn't matter. It could be 100x, 10x. The margin matter. No, the margin doesn't matter for this. The reason why is this is your variable, right? It is position size, and you adjust that to fit the stop loss amount. The reason why position or why leverage doesn't matter and why margin doesn't matter is because let's say I have 1k size and I use 10x leverage. Wait, what was the example? I actually use this one. We have 500 size and I use 10x leverage. Now I have 500 position size, so my stop loss is going to be minus $50. That's simple, right? There is no leverage in this equation. There is no margin in this equation. And to show you what I mean is, what would be my margin on 10x with this? It would be $50 margin. Coincidentally, right? This doesn't always have to be the same. This is a coincidence. Let's say I have 100x. It would be $5 margin. Now, these two are changing, but I still have 500 position size. My stop loss is still this amount away, so this 500 is going to equate into minus 50. This is an entirely separate box. This doesn't change anything. Wait, let me actually see if I have a challenge account on MEXC set up, so I can literally just go onto MEXC and show you. Deviating a little bit. It is what it is. If it locked me out, we can't do this. Lock me out. Okay, never mind. It's in the video. Anyway, this doesn't matter. It's in the video. I explained it. It is, but it is really good for scalping, and I scalp on 1 minute time frames. So I need MEXC's fees to be able to do that. Like, you can't do that on other exchanges. Login would love to see it. It is in the video. It is in the video, linked up above. It starts about 1 hour in. I think I go on to the exchange about 30 minutes after the 1 hour. Something like that. I'm not going to log in on stream. Okay, so that was a small deviation. If you are interested in this, just watch the video. It starts 1 hour in, that's where the leverage part starts. Because this is like the entire 1 hour after that. Because this is very important. That's why I don't want to do this stream, because it requires more time than this. The psychology advantage of this is knowing exactly what you lose, right? It's recorded, yeah. Whenever I enter a trade, I know exactly what I will lose if the trade goes wrong. I am okay with losing that amount because that is a part of my trade plan. If I would not be okay with losing 5% of my leverage portfolio on that trade, or on any trade, right? I keep my R value consistent. If I would not be okay with losing 5% for every trade, I would downsize this. I would say, okay, I'm gonna risk 2.5% every trade, for example, or I'm gonna risk 1% every trade, and then I keep that consistent. The very important thing is calculate that at the start of the month or at the start of a milestone or whatever. Don't change it after every play. Keep it consistent for a while and then change it at a significant time frame. So I don't change this that often. I calculate every month or I calculate on a port of milestones. Know exactly what I'm going to lose. That brings peace of mind. For the record, just because I said this, don't go onto your exchange and slide the leverage bar to the max. It is a different system than low leverage systems. You have to understand the system if you want to trade this. You can't just go onto isolated onto your exchange, 200 exit, and see what happens, because that's going to go wrong. So if you want to do that, watch the video. Now, that helps you detach from monetary value. In general, we were talking about this, right? We detoured a little bit. How can I increase my spot port gradually over a month if I have 1k in spot? Focus on consistency. I don't use time frames in my calculations for my portfolio because I don't care. I want line to go up. I don't care how long it takes, because the markets will forever be there, and all I have to do is consistently make, let's say, 1% a day, or even 0.5% a day. I have all of the time in the world. Like, I'm 21. I'm gonna be here for, what is it, like on average 60 more years. So I've got 60 years on average. So why would I care about making my port bigger this month if I can focus on just making it bigger over time? Does he know? uh, so remove that time equation. I can give you a good answer. How can I increase my spot portfolio consistency? I am starting with 1k. That is a good question. That is how I would answer it. So, to that question, I would say, 1, set up a good trade plan. You need to know how much you're gonna risk every trade. You need to have it consistent. Now, that doesn't mean you risk the same amount every trade for spot, because I don't do that either, right? I don't use. If I enter Popcat at like, if I enter Popcat or I enter Bitcoin, I am using different position sizes. That is normal, but it should be a part of your plan. So let's say you set up your plan where for every large cap coin, I want to risk 15% of my spot portfolio. For every small cap or mid cap or meme coin, I want to risk 7%. Whatever you come up with, make a plan, include it. If you want guidelines, because I'm talking about it anyway now, 10% and 5% is a good guideline. So let's say 10% for large caps, 5% for mid caps and low caps. One thing I will say though, again, all of this is in the other video. Keep USDT on the side, and this is also a psychology thing. So keep USDT on the side. That is really important for your psychology specifically, also for your account size, but for your psychology as well. Because wait, let me actually. Does anyone want to screenshot? Well, I'll just put it in chat. I don't know if people are gonna do anything with it, but there you go. It's become automation at this point anyway. It's become a muscle memory. What's it called? Oh yeah, keep USDT on the side. In the video, I recommend keep 20% on the side at all times. That is for 2 reasons. There's 20%. My spot portfolio is always USDT. Why do I do that? because initially you might think you are losing out on 20%, which, well, to some extent is correct. However, there is a very good reason for this, or there are two reasons. Reason number one, I'm going to go over this fast, is if something like this happens, I want to be able to buy. If I am looking at a coin, like for example, it's called, let's say Solana, because a lot of people like Solana, right? If Solana, let's say war breaks out now, and Solana dumps to $150, which is down like 40%, you want to be able to buy. Because in the time span of literal hours, the coin would go down 40%. The actual value is not down 40%. It is still the same token as it was a few hours ago. You want to be able to buy that. So it's like a little emergency pocket. Now, yes, that means this is not an actual always. If we get a Black Swan event, I will use this 20%. That is reason number one. I'll note that down as well. One to buy add Black Swans. Number two is, and it might sound really stupid, to be able to buy. This sounds stupid, but I think it is very important. Because how many times, for everyone that doesn't actually do this, how many times have you been fully allocated, had 100% of your portfolio allocated, and you just get nervous because what if the market goes down? Or if you are fully allocated and the market starts going down, you just stress out. Because what if it goes down? You cannot buy anything, you have everything allocated. You do that on the daily, well, you at least say you do that on the daily, Jordan. That stresses you out. Being fully allocated stresses you out. If I would be fully allocated, I would likely just instantly swap 20%. Because I want to be able to buy if the market goes down. Just having USDT on the side helps you so much with market stress. Like it is incredible how much that helps you, because being fully allocated really hurts you. And there are more strategies you can do. This is a very shallow strategy, right? This is simply the strategy. I keep 20% and I only use it in a Black Swan. You can expand this. This is what Weatherman talks about a lot as well. That's his lettering in strategy. For example, and I do this a lot as well now, is when I enter a spot position, I will never enter with my full allocation. Almost never. In the case of, for example, Sand and Mana, I did, because that was a spot position with a 3% stop loss. Didn't care. 3% stop loss is something else, right? But for actual longer term spot positions, I will never fully enter in one go. What I will do now is I will have entry 1. And on entry 1, I will allocate like 20%, something like that. So let's say I want to buy Injective, right? I want to buy Injective now. Like literally right now. This is not financial advice, but it is not a position. We are just on Injective. I will enter with 20%. Now, if we get to this line right here, I think this is a very important line. So if we get to that line, I want a DCA. Well, DCA with 40%. Now you might think there is 40% left. Why would you not DCA with everything? And I will not. Let's say this is my stop loss, right? Perfectly good stop loss, whatever. It's not an actual play anyway. The reason why I do that is I keep the 40% for other things. I will keep the 40% until the coin has shown strength, like significant strength. So in this case, if my DCA hits, that means the coin is weak, right? Because it shouldn't. I'm entering here because it shouldn't. But let's say it starts downtrending. I will not add the remaining 40%, no matter what happens. It will hit my stop loss before I add that 40%, the remaining one. The only way I will add that is let's say this is a very significant high. If we go back up and we now flip this level to support, that is when I will add the remaining. So 40% on a flip of an important level. And that is for a few reasons. One, this is a pretty good strategy to minimize losses and to maximize wins, right? Because you're only adding 40% on a win. If you start flipping levels, that is usually a sign of strength. That increases the chance that the play is going to go well. If the play just goes to your stop loss, you're only tanking a stop loss with 60% size. That's fine. And there's also the perfect scenario where it hits DCA, then shows strength, then goes up. This is a strategy that, in risk to reward terms, makes a lot of sense. This is a good strat. But it is also, and that is the main reason why I like it, this strategy is really good for your psychology. It is really easy to manage trades this way. Now, once again, on leverage, I don't do this. On leverage, I trade this through watch systems. I would just tank a stop loss. This is for spot. The reason why this is so easy on your psychology is because let's say you start heading to your stop loss. You will see, hey, I still have 40% allocation. Like, even if I take the loss, it is only going to be a 60% loss. That is not a lot. That is lower than your usual size. So no matter what position sizing you use, that is going to be lower than what you're used to. Also, are we about to hit 100k? We're really close. Coinbase is really close, actually. Coinbase is about to hit 100. I'll keep it like this. So it is easier to do it like that because you always have room to add. So you also know you have room to add. If you're fully allocated into a position, it's going to go right or wrong, and it brings stress if it starts going wrong. Also part of recency bias, right? What we went over at the start. So this strategy is one I can really recommend if you struggle with it. If you want to trade spot and you are struggling with just getting into a position and holding, do this. This is a lot easier on your psychology. Okay, are there any questions about that, by the way? I haven't even asked that. And I haven't even grabbed a drink. Let's see, is the stream gonna end before or after we hit 100k? Okay. So that is it for my allocation here. Now, those were rather full subjects, right? There are a few more, but before I go into, I'm gonna go over one more main subject. But before I go over that, I want to give you a few like very standard tips, very small pieces of advice. Something I recommend if you struggle with psychology and you're taking a lot of trades is two things. One, do not use exchange charts. So do not keep looking at exchanges. What do I mean by that? If you enter a trade, let's say I enter this trade, this is my stop loss. Nothing will happen until the trade goes wrong or the trade goes right. Nothing in between will happen. If you keep going to your exchange and you keep seeing, hey, my position is in a loss, my position is going to hit stop loss, etc., etc., you're going to stress out. So I recommend everyone get into the habit of using TradingView for all of that. TradingView is still like addictive, right? If you're in positions because you still want to check it the entire time, it is less addictive. And it is less stressful to keep looking at it because your money amount isn't on here. That goes to say, I highly recommend against using the TradingView. What is this? A trading panel? I don't know, whatever this is, where you can like press buy and sell on your broker or whatever through TradingView, and then it will show the P&L and stuff here. Don't do that. It might be more convenient if you're really experienced. It might be better because at that point you would have mastered it, right? Uh, the convenience is not worth it, at least not at the start. Because just seeing your money like go up and down the entire time is gonna stress you out at some point. So very simple tip: don't look at that. Use TradingView. Much easier and much more easy on your mental. Second one, and this is a really pity tip: don't use green and red candles, because humans inherently look at green and red. Like, we've been conditioned to look at green and red as good and bad. And if a play goes down, that is not inherently bad. It makes sense for a player to do something like this and then go up, right? Makes perfect sense. Your stop loss is there for a reason. Uh, that's fine for me because I'm colorblind. Well, okay, you got me. Not of an answer to that. Make sure you don't see it as green or red. And the reason for that is because it is totally fine if something like this happens, right? Your stop loss, in theory, is there for a reason. You enter the play with solid reasoning and with a trading plan. Your stop loss should be invalidation. Your trade is invalid if stop loss hits. If it doesn't hit, your trade is valid. That is the ideal stop loss, right? That is why you put it where you do. So if something is good or bad, shouldn't matter to you. And green and red are a lot harder to ignore because so many good things in our life are associated with green and red is associated with bad. I don't care what colors you use because that is obviously personal preference. Don't use green and red. No matter what other colors you use, just don't use those. Yeah, when you change that, you go into like the little thing over here, then more settings, and then symbol. These are the candle bodies. And then canvas for the background, of course. That's why you change that. Because quite frankly, when you see the markets dropping, let's go on a 1 minute chart. When you see the markets doing this looks fine. However, when I change this to what's it called? When I change this to red and green, and this is gonna be really ugly red and green, that is gonna suck. When you're in a position, when you're risking money on a position, and you're like kind of stressing out already. My voice gone again. Wait, can I just confirm it first this time? Carrie just went deaf. Okay. Jordan went deaf as well. Okay. Can you try rejoining? Okay, you typed out to them, Caleb. Clean your ears out. Good advice as well. My voice is distorted. Cannot hear too. Okay, I'll restart that again.
Yo,
Yeah.
yo,
Okay, better. All good.
yo.
Yeah. Hello. Hello. Yeah. Did I fix it? Can you hear me now? Gary says yes. Okay. Now I can hear. Okay. If Gary can hear it, it's all good. Not me. Well, I just said it's good, so I can't hear it still. Yeah, I mean, at that point, you have to restart it yourself. Okay, I'll give it a little bit. Give it like 2 minutes, and then I'll start. I'll continue the stream. Like Caleb's voice is good, but mine is still like that. Well, I changed absolutely nothing in my audio settings.
I can hear you perfectly fine, Grassity.
Yeah, I was about to say I don't think it can be on my end now. Yeah, Jordan. Okay, so that's the fix. People just have to fully restart.
Grass, what do you think? 100K this weekend?
I don't think we get 100K. I'm gonna be
Bro,
there.
we hit like 99.5 and then rejected, but
Yeah,
you think we're gonna see a sell-off now? We're not gonna hit
it's like if we hit. Okay,
it?
if we hit 100K exactly, I think it's gonna be a sell off. But I don't think we get 100K. Like 99.9 is essentially 100K, right? Something like that is possible. I don't think we actually get the 100K.
You know how I see it, Grassity, is like, you know how you get like in cartoons and there'll be like an angel on one side of your shoulder and then a devil on the other side? It's like the bull versus the bear. Everyone has a bull in them. Everyone has a mini bear in them. And I think that's just your bear voice talking.
No, I just think it gets front run because 99.9 is 100K for all important matters,
No,
right?
I get that. I get that. Psychologically, obviously, we're gonna see a sell-off.
Yeah,
Uh,
that's also why. For example, Doge? Do I ever think Doge is gonna hit $1? No. Even if it does, like if Doge is gonna hit $1, I think it's gonna hit like 99 point something cents instead.
yeah, I reckon, 60 cents to 80 cents isn't out of question. But personally, like, if anyone is sidelined here, I wouldn't recommend opening up positions this close. It would be far safer for you to just wait until 100K is flipped from resistance into support and then look for new positions rather than trying to long or short here, especially the way that altcoins are moving right now. Bitcoin dominance is moving. So yeah, just be cautious, guys.
Yeah, I will add one thing to that. I would not do it on 100K. My chart looks
Mm.
so unbelievably ugly now.
Yeah, I'm saying straight away. I'm just saying it's the weekend. Price action's going to be crazy. Wait for Monday market open.
Yeah. So what I was gonna say is when we take a simple fib from our old all-time high to the bear market lows, the 1.618 is right above 100K. It is 102K. I would wait for that to be flipped into support because after that, Fibonacci-wise, you have quite a bit of room. But between 100K and 102K, that is like a very small margin. So I would wait for 102K to be flipped. I don't think we get there for the record. I think it's gonna reject. If we do flip it, I would wait for 102K to be flipped. Okay, anyway, what we were gonna do is I was gonna show you. Well, actually, let's stay on BTC actually. So what I mean with red and green candles is this. Let's say you are in a position here, and your stop loss is like at a reasonable level, right? Let's just say right over there. Horrible position. Um, Wait, can I pin things in voice channels?
I don't think you can.
Oh, that is a shame. I would have to screenshot it. Unlucky. I've posted in crypto chat. Oh no. Oh, I love doing that. That is my favorite thing. Okay, keep going on. Is when you're in a position like this, the colors don't help, right? When you are already stressing out and you see like these giant red candles going on, you're gonna stress out even more. In this case, we're going up, right? It doesn't help. It is a very small little trick. It is not a main subject. I just recommend not using red and green because you're gonna be more emotionally invested in red and green things. Now I'm gonna change this back because these colors are ugly. Predicted it in March. My prediction for 24-25, we can expect a correction from the 73 to 75 zone. Okay, let's look at that first. Wait, where was this? Uh, Wait, last March, so right over here. Ooh, you got the first one wrong though. Ooh. No, oh wait, you said 73 actually. Okay, no, you got it right. That's impressive. Because a lot of people didn't see this coming. We can go down to 50k. Okay. And that should be the only correction. Okay, that is the only thing where you were wrong. That was not the only correction, but it was the main correction. Hey, you know what? Well done. That is really impressive. Okay, so that was a little piece of advice for what's called just very little tips and tricks. I have one more subject I wanted to go over, and that is it is partially a very big subject because partially it also goes into the efficient market theorem. It is partially a bit of a smaller subject because inherently it is a bit simple. I'm going to keep it as simple as possible. So, when we look at trading, and especially traders, we know, I don't know the number out of the top of my head, but we know that most traders are not profitable. For investors, this can be a different story. Investors are probably a bit more profitable because just go and buy SPX consistently and it's probably going to go up, right? Traders are usually not profitable. It is likely, I don't know the actual number, I'm just going to pretend it's 99%. Let's say 99% of traders are not profitable. Now, you can rephrase that if you want to. Because 99%, it is somewhere upwards of 90%, right? That is a very high number. So, whoever you go and talk to, that person is more likely to be wrong than they are to be right. By simple odds, they are more likely to be wrong than right. Now, why that matters is because I talked about consistency at the start. You cannot follow one person consistently. Because, for example, let's say you really like Archmeister's calls, but you are a European or you are Asian. Now, if you have a regular sleep schedule and you're a European, right? Sometimes Arch will call at 4 a.m. because that is a normal time. You cannot consistently follow that. Or if you really like following this one person on Twitter, you're gonna miss calls. Or what's it called? Or in any other scenario, you cannot fully consistently follow anyone else. You can only consistently follow yourself. That is the only person you will always be able to follow because, well, it's you. Why I think those two things are very important is for the next thing I'm going to say. And that is, using that reasoning, we can get to two things. I am skipping over a bunch of things for time purposes, right? We can skip to conclusions. We can say, okay, so if I go to Twitter or go to any public Discord or go to any public forum or whatever you use, most people there will be wrong about the market. Because quite frankly, especially on Twitter, especially I trade a very exact system, right? I can just see that people are using the wrong ratios for harmonics. It just doesn't work that way. But on any kind of market system, most people are wrong. They might be right once or twice, but over a long period of time, they will be wrong. And on top of that, you cannot consistently follow them. So, use them to learn instead. And follow yourself. When you see an analyst, I'm going to use Archmeister again. When you see an analyst like Archmeister, he's very good at support and resistance trading and chart patterns. So, if you are also interested in that, use his calls to study the chart. So let's say he calls an AVAX long or an AVAX spot position. Go on AVAX and see, okay, can I get to the same conclusion? Let's say we want to, I don't actually know where he entered, right? Let's say he bought over here. Look at, okay, why did he enter? And you just go to the left and you see, oh, That is a pretty good level. Makes a lot of sense, right? Learn from that. Do it yourself, look for the reasoning, etc. Learn from it. That is something you consistently do. You can consistently do. That is one part. The second part, and something that is a lot harder, and also something that is a lot more psychology related, because this is a process of just becoming better at things, right? Use people who are very knowledgeable about something and study their stuff. That is also what I did for harmonics. I studied other harmonic traders that I knew were at least consistently right or knew what they were doing, and I studied their charts. I appreciate Winter. That's really nice to read. Use that to study. That is how you can become better at things. That is something for when you are either trying to take a trade or when you are not trading said asset. That is a rather low version of ego, right? When you look at something and you acknowledge, okay, I think this person might be better at this than I am. I want to get good at it, so I'm gonna see what I can learn from them. That is a rather low ego thing to do, right? But that is a very good thing to do because you will become better that way. However, the other part of trading is a very high ego thing to do. And I will explain this in the way I do it, right? When I am in a trade, when I am, for example, right now, right, I am short on Sol. And the reasoning for that trade is because the 12-hour SFP, we have bearish variances, whatever, and we have this, this is a partisan, a harmonic pattern. That is my reasoning. Someone might not agree with that. Completely fine. Someone that I look up to might not agree with that. Scott Carney, for example, like the guy who made harmonic patterns, right? He can come up to me and say, I don't think this pattern is going to work. I will still ignore him. As long as I am in the trade, I will completely ignore anyone that says something about it. The reason for that is the little story I did at the start. You cannot consistently follow anyone else. You can only consistently follow yourself. So you can only consistently learn from yourself as well. The only way to actually keep learning is to look at your own trades, make your own trades, make analysis, make a thesis and validation, everything, and then do that. Do exactly that. If someone else says, hey, I don't think this is going to work, but you are already in the trade, right? Ignore them. It doesn't matter what they think. Like, it really doesn't. Because even if you follow them, they might be right, and it might, on the short term, save you a few bucks. But on the long term, you might make that same mistake again. If I make a mistake, I want the market to tell me I make a mistake, and I want to learn from it. Because, again, in the long term, that is how you improve. That's how you get better at things. That doesn't just go for trading, by the way, that goes for everything. If you want to get good at sports, you need to play the sport and see what you're doing wrong. If you are consistently kicking with the right side of your foot, while in reality you're way better with the left side of your foot, you need to kick a few balls and you need to see what's up. You need to know that, and you just look at, hey, every time I shoot with this side of my foot, I miss the ball. I just miss a goal or whatever. You need to do it, and you need to reflect on it, and then you can get better. It's a very simple example, right? For trading, you need to take your trade, and you need to stick to that. Let it go wrong if it goes wrong, and learn from it. And not every bad trade, or not every lost trade, is a bad trade inherently. You will also find that out when you're reviewing things. There are a lot of trades where I look back at them, and when I'm like, okay, this and this happened, I followed my system, I had every confirmation I needed to have, I did everything I needed to do, it just went wrong. That also happens sometimes. But you need to get into a state where you can both say no to everyone else and ignore them, and also look back at your own trades without any ego and just look at it, okay, what did I do right or what did I do wrong? If you were wrong, let the market tell you were wrong and adapt to it. And that takes some time. That is purely a psychology thing as well, because it takes some time to be able to switch that. Especially for people that you look up to. You need to just hard say no. Like, if someone comes to me, I don't care who it is, I will stick to my own trade. Unless once, what's it called? Until it has played out, right? If the trade has played out and that person beforehand said, hey, I think this is wrong about your trade, and then the trade actually goes wrong, then I can use that. Maybe he was right. Maybe I can learn from that as well. But don't follow the advice, because consistently it is only going to be you that you can learn from. Even if the single scenarios might differ a bit. So yeah, Jordan, that's also, I mean, that's what it's called in the course, right? This is like a summary of that. It's like everyone around you is wrong consistently. That's the mindset you need to have. It doesn't matter who it is. So that was the other thing. And this concept of ignoring people when you are actively doing things, and then also taking people's advice when it is genuine and you are not doing said thing. And for example, when you're training for football or something, and a coach comes up to you after a match and says, "Hey, I noticed that you're way better kicking with your left leg instead of your right leg," like something like that. But in the middle of the match, you're not going to change that. You're just going to do what you need to do and what you think is best. This is something you can use in a lot of parts of life. This is also not something I learned in trading, right? I learned this in sports. I learned this in video games. This is something about general improvements, about improving at whatever you want to do. Because quite frankly, the only way you can do that consistently is by following yourself and listening to yourself and then reviewing that. Okay, I think that was most of what I wanted to go over today. Now, we have a little time. So the last part I wanted to do is, I wanted to ask you guys, is there any specific part in trading that you struggle with psychology-wise that I haven't named? Something that I didn't go over that you have questions about? And I can put it in chat, or I guess if you don't want to say it, you can also send me a DM, but then I will talk about it on stream. If you say it in DM, I won't name that as you. I don't think that's going to happen, but if you want to do that, then you can do that. All of a sudden, I get like 20 DMs. Like everyone sends me a different thing to stay anonymous. Didn't get there yet. Oh hi, did we touch? 99.65. Almost got there. See some people typing in chat. My brother is writing an essay. We're gonna get the biggest story ever. A lot of times my trades stop at break even after TP1, so I might be up 2R, but the trade goes to break even after 0.5R is booked. Should I be more aggressive with TPs? Not really psychology today, but whatever, I'll go over it anyway. So if this is a part of your plan, right? I'm not going to talk about other people's plans because truth, whatever, you should ask them. So I'm going to go over my own. Let's say, what was the recent trade I did that had that? A trade that hit TP1 and I hit ETH. We had an ETH short that did that. Yeah. So we had this ETH short, and in reality, this is the short. Something like this. we took TP1 right here, and then I went to break even. I said I took 33% off because I was planning 1 TP over here, and then I wanted to full TP right over there, something like that. So I took 33% off, and then we got stopped at break even. Now, I'm gonna go over my system, right? In my system, this is a part of the plan. I know that if I consistently take TP1 at least about 1 hour, so 0.9 hour, whatever, completely fine. A lot of fibs will often align so that I have 0.8 hour as TP1 does the maximum I allow. If I consistently take profit somewhere around that region, I know the exact win rate I need to achieve to be profitable. So my TP1 is usually going to be at 1 hour. Then I take 25% off, so I realize 0.25 R if a trade were to hit TP1 and then entry. I realize 0.25 R if that happens. Can't hear it again. Oi. Can other people hear me? Could anyone else that can hear me confirm it in chat? Because that's we have the last few.
Yes, yeah. I think they're breaking your balls at this point, mate. I can hear you perfectly fine.
Can hear you.
Yeah, we can hear you.
But can Alex hear me because he asked? Alex, be honest. He's typing. Yeah, okay. I was about to say if he starts typing now, that's gonna be very telling. Okay.
Hey, Grasty, sorry to interrupt. I'm just gonna hop off because I need to take a call, but I appreciate you really doing this class. You know, huge shout out to you, brother.
Yeah, sure, appreciate it, and thanks for hopping on. So good luck
No
with
worries.
your call.
Love, bro. Take care.
Yep. Okay. So it is a part of my system, right? I've calculated this beforehand, and I know exactly what I'm gonna end up with. For a 0.25 R minimum, right? If I were to only have 0.25 R per trade, the moment Caleb leaves, audio cuts off. The fun thing is that Alex also had this as well. Gonna give him 2 minutes to restart and see if that works. This is gonna be the last subject anyway. So for those of you waiting, we're gonna answer this question and then we're gonna wrap it up. Unless there's more questions, but I don't think so. I restarted and I can't hear shit. Can you hear me now that I'm actually talking? Same thing. Okay, I'm gonna restart once more. Last one. Okay, did it get fixed? Finally. Just lost 20% of my future support. What should I do? Well, first of all, can you hear me? Because I'll give you an answer, but need to confirm it first. Yeah, clear. Okay. Lost 20% of my future portfolio. What should I do? The other guy's restarting anyway. Can't hear me, so I'll answer this first. First of all, stop trading for the rest of the week. It is a Friday. You have weekend come up. Just stop. That is the first step. Now, what you can do is, well, first of all, take 1 or 2 days rest. And when you come back, what you should be doing is review your trading plan. Is your trading plan actually solid? Me too. Okay, wait, I have an idea. I'm gonna do the thing For all of you that can hear me, disable the sound of screen share. So right click my screen share and then put the sound to 0. Because that way I can do this. Can you hear me guys now? The guys that couldn't hear me before. I turned on the echo again. I think that could fix it. That's really annoying, by the way. I really hope that this problem isn't gonna last. Because my audio device didn't get switched, right? No, they didn't. It's good for me. Yeah, okay, it should be working. I don't have any other fix for you guys. I don't have any other. Okay, anyway. So what you should be doing after that, after you get back, is make a new training plan. Or at least review it. Are you losing money because of something that you can fix, right? Likely, 20% is a lot. Review your trading plan. Are you risking too much? Are you, or are your trades just going wrong? Like, is your analysis lacking or is your trade plan lacking? For example, I always know what I am risking. I know what my limits are. I know what my win rate should be. If something goes off, it is like my analysis. If you're risking too much, yeah, you have the problem now, right? So when you go back and you go and review your trading plan, oh, I just saw someone join voice channel. That is actually a really good idea. Should we join the voice channel instead? That should probably fix it for everyone. Yeah, let's do that actually. Let's join the voice channel. I'll put it in chat as well. Join voice channel for the end. I'll put the actual link in chat as well. Let's give the little. I'm gonna. Why can I hear that? Let me go to the chat. Okay, now we good. Okay, that is way better. Let me actually turn on streamer mode though, because this is gonna be really annoying in the recording. Okay. So let's go back to what I was saying. So now you know where your mistake was, right? You know that you're risking too much. So, first of all, we have the mistake, take a little break, and then come back and try to fix it. How are you going to try to fix it? By making a new risk management plan. If you are happy with the amount, with the way you are risking, if you are happy with the system you're using, but you're simply risking too much, then you can adapt that system and simply turn the numbers down, right? You don't have to touch the rest. If you are doing something that you cannot easily change, if you are not happy with your system, find something new. For example, if my risk reward system wasn't working for me, I would try low leverage systems. Other way around as well. If your low leverage system isn't working, try risk reward systems. However, if you have a system that works and you like it, just turn the numbers down. Risk less. Change your plan, then try it again. And you don't have to try it again with real funds instantly. You can also just get on the chart and backtest. Like, use the little replay feature, right? Go back in time and try to trade right over here with your new system. Just note it down and see if that works. If it doesn't work, change it again. Get a working system before you properly start trading, right? That is what I would do after a significant loss. And if you run into any like new questions while doing that, you can always just put them in chat and tag me, and I'll help you out. Yeah, sure. Okay, Alex, you're back. I can answer your question now. Yeah, so if you run into anything, let me know in chat, and I'll help you out with that. Okay, so as for what you said, it hits TP1 a lot, and then it hits my break-even stop loss. So, for example, this trade. This one we took 33% at nearly 2R, I think. That was an extreme example. Usually, the minimum I go for is TP1 at 1R, 25% off, 0.25R realized. Now, with this, I would need 4 wins to make up for 1 loss. That is completely intentional. The reason why I say that, and that is intentional, is because 4 wins, 1 loss is about my average. So I know if this is my minimum for a win, I know that on average, I'm going to break even. How do I know that? Because I backtest and I front test. I have the data. That is also why you can go back on the monthly results thing, and I will always have between a 70 and an 85% win rate. Because that is like my margin of error. So for that, this is okay. Because if my minimum on average in a month is to break even, then every single time we hit a TP2 or 3, or we have a really good trade, or spot profit, or whatever, that is going to be extra profit. On average, we break even. That means everything that goes past TP1 is a major win. Now, I've worked this system out to the extent where I can confidently say that the minimum is breaking even, and everything that goes above that is profit. However, if that is not the case, if you are consistently hitting TP1, then hitting stop loss or break even, and that is causing you to lose because you win a lot less than you lose if stop loss hits. For example, if you make 0.1R per win, you would need 10 wins to make up for 1 loss. That's like a 91% win rate. That's not realistic. If that is the case, you have to look into your analysis, because this likely means that you are not taking profit at proper moments, or that your analysis is not correct, or that you are not getting as much profitability as you can. Because 0.1R per win is not something that you can consistently profit off of. Because this is a good baseline. 0.25R minimum per win is a good baseline. Because if I go to, for example, the injective trade, we took 2 TPs, right? This was the second TP. And we're planning on 3 TPs. Or I said leave a little bit of room in it. So let's say you plan for 4 TPs. This would be about 0.3R realized. And this is about 0. I cannot do that out of the top of my head. 0.6, something like that. So those two together are going to bring you at about 0.9. This is 0.9 I realized at the moment. So every second TP is going to be a major win. What do we come from? We came from ETH. If that is not the case, if you are not consistently winning with strategy you're using, you need to adapt something. For example, your stop losses may be way too wide. Let's say you want a long, and instead of putting the stop loss right over there, you are putting it right over there. And now if you want to TP at the next resistance, that's going to be 0.6R. Doesn't make any sense. For this, you would need a very high win rate. However, for 1.2, 1.7R, you won't need that high of a win rate. Very important here to note is that win rate is not the important factor. It is, do you actually make profit? The profits that you lock in when a TP hits, right? Is that enough to cover for your losses? Do you make a profit in that? The win rate in that doesn't matter. If you make 10R in one trade, let's say you make 10R, well, I can now take 10 losses before I make 1 win. If I make 0.1R, already said it before, you need 10 wins to make up for 1 loss. if you are not consistently profiting, it is likely because the amount you're risking is not proportional to the amount you're gaining. So in my case, I make sure these are always very imbalanced, right? I make sure my first P is always based on analysis and that it is at minimum 1R. If this is not the case, if you're making, for example, 0.1 R per TP, there's something going wrong. You need to look into that. It is likely just your stop loss, or you're using too many DCAs. I don't recommend DCAing on leverage for the reason that for this injective trade, injective is actually a really good example. I forgot that we had a DCA for that because I never do that. We had a DCA for this. We went into this with 0.5R. But what I just said about 0.9R, we actually made half of that, right? We made 0.45 realized because we had a DCA. But if stop loss were to have hit, we would have still lost 1R. So the other possibility about not being profitable, because you keep taking TP and then hit break even, but your losses are really big, could be DCAs. If you consistently have 1 or 2 DCAs or leverage, there's a good chance that that is hurting your profitability because you might have a slightly higher win rate because you DCA and then you just close it when it gets like a little bit above your entry. Well, good job, you have another win. But that's not how you become profitable. That is how you get a higher win rate. Because this TP, we didn't actually get the full TP, right? We got half of that because we used the DCA. Now imagine if we have 2 DCAs. We only got a third of that. DCAs hurt. I never recommend to consistently DCA leverage calls. Now I will very sometimes use the DCA. Like sometimes I just think, okay, we're right here. I think it is very likely to go down, but it could also just start going up. That is when I DCA. Now sometimes I do. If you consistently DCA, that is bad. That is likely hurting your profitability. So that's the second option. Does that answer your question? Yes, thank you. Okay, that is good. That is also why I'm so heavily against multiple DCAs and especially soft stops as well. Like multiple DCAs and a soft stop loss, that's gonna hurt your profitability a lot. Because what if this injective play? Let's say we hit stop loss, right? But we don't actually hit stop loss here. We hit it down here. Now you're losing 2R instead of 1. But we also have 2 DCAs. So if we hit TP1, we only have a third of the profits. But we now get even bigger losses. So that's why I really hate this way of trading. I don't do it this way because of that. Okay, that is going to be it for me. That was everything I wanted to talk about. And I think we answered the questions as well. What is the best source to learn about harmonic trading? Currently trying to learn from your charts. Not about the topic of today. Yeah, no, that's completely fine. Okay. I really hate doing that. I'm really not made for this. But I'm gonna do it anyway. I'm gonna open my course back up on this Tuesday. If you are interested in that and want to get in before the others, because I do limit my course really heavily. There's 10 people max in it, so I limit it heavily, so I have time for people. You can get in if you send me a DM if you're interested. I will send you all of the info. It's completely fine. That is way number 1 of learning it. I have a course. You can join that if you want to. You don't have to because the information is also online. If you don't want to do that, there is a pinned message in my channel that contains the sources I learned from. If you go to my pinned messages, wait, I'll actually link it in chat as well. Let's see. And you have to scroll down quite a bit. It is the first pinned message, actually. I have made a post about this before. Now, the video in the post is a bit outdated. because I learned a bunch of new things and I will do it slightly differently, but the information is still correct. So I have a course. If you don't want to join the course, use that message. In that message, I say something along the lines of, here's a video I made that you can follow. It's a free stream. You can just watch the video. And these are the books I learned from. There are 4 books about harmonics. Most of the information is in the first book. Everything after that is very useful, complementary. So that's the other option. Go and read the books. The pinned message in my channel explains actually everything. That is all you need to start learning harmonics. That and just start charting them. Really helps. Yeah, glad you liked it. Stream mode to say, but glad you liked it, Miranda. So I think that was everything. I think we went over everything. I thank everyone for coming. I really appreciate it. Especially those that ask questions actively. So I'm gonna stop the recording here.